Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics for ALN Apartment Data, and this month's newsletter was called Major Developments in Price Class Absorption. One of the main stories for multifamily this year has been the robust rebound in apartment demand that we've seen, and coming into the year, we sort of expected to see net absorption improve over where it was last year, and the industry really has been in a broader uptrend in apartment demand since 2023. I think the surprise, though, was the extent to which net absorption has gained ground this year. We really are seeing demand numbers lower only than in 2021 among recent years, which again, 2021 was sort of an outlier in terms of the strong demand that we saw that year. So really good results. And one of the encouraging aspects of apartment demand that we've seen this year has been the widespread nature of that improvement. So it's not just, certain markets or, just in the Class A or something like that, but really across price classes, both stabilized and lease up properties, markets of all sizes, we've seen positive results. And so this month I really wanted to dig into the price class aspect of that sort of broader demand trend that we've seen. And one area that we really did not touch on much in the newsletter was layering on market size with price class. So ALN categorizes every market in the country, either primary, secondary, tertiary, or micro, based on the size of the multifamily stock in that market. And then we can layer on top of that price class. And what's interesting is, again, there have been demand gains really across the board when you're layering those two together. In particular, though, I thought something that was of note was that in the primary market specifically, Class D net absorption over the last 12 months has managed to wipe out the loss in lease units of the previous 2 years. One of the things that we're looking at now in terms of industry performance overall is, particularly on the occupancy front, we're now in a situation where new supply is coming in a little bit lower than net absorption. And so we're seeing some occupancy gains for the first time since 2021, but there's so much ground to be made up after the negative moves in 22, 23, 24. And so it's good to see now in certain subsets of the data where we are actually seeing some of the losses being erased from the last few years. And Class D properties, specifically in primary markets, are a great example of that. Something else that was interesting in the data is, again, just I would say the widespread nature. Even when you go all the way down to micro markets, the scale of the increase in demand is smaller, even when we look on a percent change basis. So, the percent change will sort of account for the difference in market size. So we haven't seen quite the same kind of surge in demand across the price classes in those micro markets. Nevertheless, all four have gained ground over the last year. And once again, Class D has sort of had the most robust recovery. So over the last 12 months, more than 1,500 net units absorbed in micro markets around the country for Class D. If you look at the previous 12 months, it was less than 50 net units nationally in micro markets. So really all good there. And that bodes well as we look forward to the close of this year and 2026. The fact that apartment demand has been so strong sort of across the price classes this year is a great sign for where we're going next year. And I wanted to just briefly mention too a blog post that we're going to be putting out sometime in the next week or so. We're going to be looking at changes in sort of the correlation relationship between lease concessions and demand and rent. So looking at how effective lease concessions have been at driving increases in net absorption and what the effect of those higher lease concessions have been on rent performance. So this is one area that has to do a little bit with that, because as I said, one of the things that we're now watching for is how is occupancy going to recover from the previous few years of declines. And lease concessions, of course, are a big tool there. And that's something also that from a price class perspective, we've seen normally Class A, Class B going to have higher lease concessions than we see in the workforce housing segments. That really has not been the case over the last few years. We've seen parity from Class A all the way through Class D as operators try to drive leasing activity. So I just wanted to point out that we're going to have a pretty good article coming out on that shortly. In addition, I've got a few speaking engagements coming up that might be relevant to you. So September 18th, I'll be in Portland speaking at the Multifamily Northwest Spectrum Education Conference. September 23rd, I'll be speaking for the Utah Apartment Association in Salt Lake City. September 25th, I'll be speaking in Sarasota for the Bay Area Apartment Association here in Tampa. And then October 8th, I'll be speaking for the Missouri Apartment Association at a dinner for them. And all of those are going to be sort of market update type presentations. So if any of those markets are relevant to you, check our social media and we'll have registration details for all of those. Other than that, find us on our social media, sort of your social media of choice, ALN Apartment Data on whatever platform you use. And I will see you next month.